Traders, and happy Friday. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, and joining me for Russell Rebalance Friday is Chris Dearborn, who's the Managing Director of Nasdaq's Market Intelligence Desk, or what we affectionately call at Nasdaq, the MID. Chris, thank you for joining me today. I want to focus on consumer stocks because people are still talking about that Amazon Whole Foods deal.
It's unbelievable. Thanks, Jill, again for having me on. You know, it's really impressive that you see such a behemoth like Amazon going out and buying a brick and mortar food distributor company like Whole Foods. Even though the price paid was very significant, it's really a mid-sized deal, but what it's generated is the buzz in the entire space. You've seen consumer staples moving back and forth on top of this. So you see a lot of the competitors and the grocers kind of selling off a little bit on the news because expectations were there's going to be some M&A in the space, but then Amazon comes out of nowhere because you were looking at private equity actually taking some of these companies private, and then Amazon comes in and people are like, what is Amazon seeing that everyone else isn't? And obviously Amazon is such a great operator that they're seeing some value there. You're just going to have to eventually tell everyone how they're going to make money on this deal.
Right, and it's really interesting because the grocer space is low margin as it is. And you have someone like an Amazon come in with their pricing power, but we did pick up on some interesting, unusual options activity with trade alert data last Friday when they announced the deal, and also on Monday we saw some significant call buying in Sprouts farmers markets. And that has been around. I know in March Bloomberg had reported some speculation within the M&A space, but you're starting to see little pockets of options activity suggesting that perhaps Sprouts, for example, could be next on the list.
You know, the options market is a great way to play the space if you want to be less capital intensive.
Right.
And it's a great way to put a time frame on that space as well. So you're going to see fluctuation and you're going to see volumes pick up here and there. But really, if you're looking for consolidation in the space, options is a great way to take advantage of that volatility within the sector.
Right. Also, Walmart had an interesting announcement last Friday as well, buying Bonobos. I believe
Yes.
That's an upper scale men's store. It's interesting to see a group like Walmart get into a name like that.
What you're seeing really is kind of funny. You've got the online sellers and you got the brick and mortar. And what you see is the brick and mortar is buying more online distributors and the online distributors are buying more brick and mortar. So somewhere they both finally are going to realize that they need each other at some point because the consumer is going to spend regardless of what the vehicle is, and more people are looking for different avenues to spend. So the channel really has to be omni for everyone. You have to have an omni-channel presence to really make it work. And without that, if you're missing one segment or the other, you're missing out on a potential sale, which means that he or she may not be purchasing stuff that you have for sale.
Right.
And that's a problem. So you see Walmart grabbing more online capacity, where you see Amazon coming in grabbing a little bit more brick and mortar. And with that, once that works out, you're kind of looking at the whole space and you're thinking, well, who doesn't have enough online presence? Who doesn't have enough footprints within in brick and mortar in the space? And what you're seeing, there's a good mix of companies trying to grab or chase in there. So looking at the option expirations coming up and the activity that you've seen, especially on the put-call ratio for a number of these stocks, you're looking at people saying, you know what, this could be an interesting play into the space, and the options are a great way to play it on a short-term basis. So the sector is very much so in flux.
Right. Well, I also think that when you look at companies such as in Amazon, it's really the winner is going to be the one that has the distribution network. And clearly, Amazon has that locked down. So I think you're right. You're marrying the two of them and coming up with something in the middle is really what's going to be key. And not that this is out there in the marketplace, but if Amazon is going after the higher affluent customer, which is what Whole Foods is.
Yes.
Who's to say they want to go after a restoration hardware, for example? So there's just so many different areas that you can look at within the consumer space, whether it's based on consumer spending trends, certain demographics. And I think it's the first time in a long time because consumer staples and discretion really aren't that sexy of sectors, but I think this is really where the focus is going to be.
Amazon's always wanted to get into the grocery space. So your distribution networks really are great for dry goods. They're great for any type of other item, whether it's clothing or anything else that really has no issues there. But when you come to actually food, the issue with that is that last mile, getting the grocery into the household. And that's where the footprint, you really need that physical brick and mortar footprint. It'll work fine with their Amazon distribution within large cities, New York, London, San Diego, wherever it might be. But then you have less urban areas where they really need that physical footprint where people will go to the store. And Amazon, as I said before, is a great operator. They're going to figure out how to make this work. And Whole Foods, with their footprint, is going to be with the affluent, but also they're going to look for the distribute through Amazon through all of their channels as well. So you're going to see a nice marrying of the two, and kind of interested to see how that works out. I mean, investors are already confident that Amazon is going to make this work.
It's unusual to see the acquirer get bid up
over $1,000.
Right.
They sold off a little bit nuts. It's still trading above 1,000. And the Whole Foods price is trading above $43 today.
And the deal's at 42.
Correct.
Right.
So there's still some speculation how this is going to work, or if there's going to be another white knight coming in.
Right, well, selfishly, I'm excited because I would love to see pricing much better at Whole Foods. But I want to give traders a quick update as we're at the halfway point of 2017. Our three key leaders: tech, healthcare, and consumer discretion. Tech up 19% on the year. The S&P up 8.8% for the year, and of course, Nasdaq leading the name because of those tech-heavy names. But it's not just one specific segment within the tech sector.
No.
Broad-based, it's really outperforming.
You're seeing some great names, whether it's on the chip side, whether it's on the operator side, or on the physical, all doing well. And it's kind of rotating through as they move along. You've got great announcements from AMD this week. Apple's been a leader in the space. Google's been a leader. Microsoft. And each one of those is carrying, because the Nasdaq 100 is an index-weighted, market cap-based index. You're seeing the larger weighted companies kind of carrying that up. Even when they sell off, you're seeing a distribution within other sectors picking up. Healthcare has had some significant move recently. Biotech within that space has been doing very, very well recently. And early in the month, you even saw financials ticking up, coming into the Federal Reserve's decision to raise rates a quarter of a point at the last meeting. So what you're seeing is really a broad-based, evenly keeled rally with the sectors continue to rotate one over the next. And that's really nice because you're seeing folks, investors, take money off the table in the winners and putting it right back to work in another sector that's a little dragging behind. And that's going to keep taking this market higher and higher. You got great returns in the infotech space. You got great returns in Nasdaq 100 across the board. And Nasdaq 100 is not just infotech. You've got Kraft Heinz, you've got Mondelez, you've got Henry Schein, you've got all sorts of companies that do not focus on that space, but also focus on the consumer as well as healthcare, and they're all doing well.
Right. Well, can you imagine if we actually had participation from the energy sector, which will be interesting because when we talk about sector rotation, looking at earnings season coming up and for the remainder of the year, okay, energy, they're eventually going to start comping against bad numbers. Same thing with financials. They are improving. We're getting interest rate hikes. Look at all the stress tests. They passed with flying colors. So you could perhaps see the flow go into those sectors as well, assuming that the earnings season plays out. So that could potentially be a couple.
So you're looking at some catalysts that might affect the market coming up. So one, we mentioned this as you started the segment, is the Russell rebalance today. So tonight at the close, the Russell is going to rebalance their family of index. It's anticipated to be the busiest day of the year so far to date. Generally speaking, over whatever period of time you want to go back, Russell rebalance in June is one of the three, if not the busiest day for the first half of the year, and absolutely one of the 5 busiest days for the entire year in volume.
It only happens once a year versus
Correct.
S&P rebal, which is 4 times.
And it involves, the Russell is not just the top 1,000 or the bottom 2,000. The Russell 3000 composite is just about every listed company in the United States and you have the microcap as well. So everybody's affected by this. So the volume's on the close. It's going to be significant. Generally not a price mover, but definitely heavy volume for index and passive investors.
Right. It's tied to about $8.5 trillion. That's tremendous.
It's almost incomprehensible how much money that really is.
All right. Well, this will be one of the more interesting closes for 2017. Chris, thank you as always for joining me at MarketSite, and traders, thank you as always for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.